Thank you, Senator. Our next speaker is Maria Ariza. Maria is the CEO of the Mexican Association of Private Equity and Venture Capital Funds. She also worked in as associate at NAFTA Fund of Mexico, private equity fund investing in medium-sized Mexican companies. There, she analyzed and helped structure investment opportunities and performed industry and financial analysis. Welcome, Ms. Ariza. Thank you for being here.
Good afternoon. Chairman Hueso, other distinguished members of the Select Committee on California-Mexico Cooperation, and fellow speakers. My name is Maria Ariza, and I thank you very much for the opportunity to speak before you today and participate in the 6th California-Mexico Advocacy Day in Sacramento. I feel deeply honored to have the opportunity to explain the history of the Mexican Private Equity Association, or AMEXCAP, and its role on the Mexican capital markets. Additionally, I would like to speak of the increasing investment opportunities that have been found throughout Mexico and the role that California has had and will continue to have in the development of these opportunities across our borders. AMEXCAP is a non-for-profit association whose mission is to foster the development of the private equity and venture capital industry in Mexico. The association was created in 2003 and comprised of 4 participating fund managers. While both private equity and venture capital were relatively nascent industries in Mexico at that time, particularly when comparing that to the United States, their growth pattern has been quite remarkable. In the past 12 years, it is estimated that fund managers in Mexico have increased 19-fold and assets under management by 30-fold. Our latest conference, the 10th Annual Summit Private Equity in Mexico, last March, was a testament of that growth, featuring speakers and panelists from both Mexico and the United States, while bringing together over 780 attendees from several countries. Currently, AMEXCAP represents almost 80 private equity, venture capital, real estate, and infrastructure managers that actively invest in Mexico. Additionally, there are about 40 managers that, having offices abroad, have invested in Mexican opportunities for a total of 125 fund managers already. Amid these participating funds is a diverse group of foreign and domestic investors with an array of strategies and investment profiles. Additionally, AMEXCAP includes over 35 advisory services companies involved in the areas of corporate law, tax advisory, financial services, and consulting. AMEXCAP members have raised a cumulative of almost $25 billion over the past 12 years and have invested in a broad range of sectors such as real estate, media and telecom, wholesale and retail, financial services, healthcare, transportation, business services, infrastructure, and manufacturing. As the CEO of AMEXCAP, I am responsible for furthering the development of the private equity community in Mexico by developing and fostering relationships with institutional investors, maintaining relationships with authorities and regulators to improve competitiveness and broad dissemination of industry information. At AMEXCAP, we have been pleased with the increase in cross-border investment activities between the United States and Mexico, and we're very excited with this growth potential. A few notable examples of these recent cross-border investments include Advent International's $53 million US minority stake in a Grupo Financiero Mifel, a leading Mexican bank serving the mass affluent retail segment, and BlackRock, with First Reserve acquiring approximately 45 equity interest in Pemex Los Ramones gas pipeline. That represents an investment of $900 million US. The Los Ramones projects consist of the construction and operation of 462 miles of natural gas pipelines to transport natural gas from Texas to Mexico. This will be the first major Pemex-sponsored midstream assets to be built in partnership with foreign capital since the approval of the energy reform in 2013. These are just a few examples of many cross-border opportunities we have seen and exemplify the broader growth in Mexican investment. In 2013, foreign direct investment in Mexico rose to a record of $42 billion, boosted by the $13.2 billion buyout of Grupo Modelo by Anheuser-Busch InBev. While foreign direct investment returned to historical norms at $22.6 billion during 2014, the figure can be somewhat misleading due to the $11.4 billion in reductions to the foreign direct investments as companies sold their assets to Mexicans. In terms of net inflows, Mexico recorded its second strongest year in 2014, with $33.9 billion, or roughly 50% above the previous 10-year average. As Mexico continues to improve its investment environment, California will undoubtedly continue to be the beneficiary of this growth as cross-border opportunities increase and trade between the regions continue to expand. This drastic growth of investment opportunity has come on the heels of sweeping economical and political reforms passed by Enrique Peña Nieto and the Mexican Congress in 2013. Following decades of restrictive regulation and limited competition, these constitutional reforms brought about sweeping changes in key sectors in Mexico. The most significant of these changes occurring in the energy industry. A state-controlled Pemex may now partner with domestic and international private sector firms for oil field exploration, as well as government-owned Comisión Federal de Electricidad would do the same to generate and distribute electricity. Another important reform related to the telecommunication sectors by creating autonomous regulators to diminish concentration and to improve competition. These sectors have since become a focus for private equity and venture capital throughout Mexico. Not only these constitutional reforms seek to open key sectors to foreign direct investment, but aim to address deficiencies in the country's structural business environment, taxation, infrastructure, and overall competitiveness. While the full effects of such reforms will not be felt for years to come, the increase of investment activity demonstrates the optimism that permeates in the country as a result of these actions. Finally, the recent reforms appear to have ushered in the beginning of a new era of increased global access for Mexico. In response to this apparent success of recent action, Mexico has begun to further its global investment presence by proposing legislation and additional reforms to open approximately $160 billion in Mexican pension money that would allow interesting joint ventures with foreign investors in financing infrastructure, energy, telecom, and other projects. Almost 20 years ago, Mexico took a fundamental step in adopting a pension system plan with individual accounts. This change has been so successful that in the last 10 years, the financial resources managed by the pension fund had grown 17.3% per year. Today, their assets represent 14% of the gross domestic products. In 2013, the Mexican Congress modified the pension system laws to allow a further diversification of investments, to increase pension funds' money to finance productive projects, as well as to stimulate workers to increase their voluntary savings in their pension fund accounts. Mexico Advocacy Day and other recent meetings between the state of California and Mexico serve as shining examples of this expanding investing opportunity and relationship. Governor Jerry Brown's recent trade and investment initiative to Mexico last summer furthered dialogues between the regions. President Peña Nieto subsequently visited California to discuss trade and the ever-increasing partnership between California and Mexico. This morning, representatives from the California Public Employees Retirement System, Fondo de Fondos, an investment vehicle created by 4 Mexican development banks, and FOSIR, governmental institution to promote the investment in rural and agribusiness sectors, met to further the dialogue between investment communities, forging a relationship that will continue to strengthen over the years. We at Amex Cap strongly believe that the investment community will continue to develop throughout Mexico, and that the state of California will have a vital role in furthering that development. We also believe that California pension funds will find in Mexico investment opportunities with strong risk-adjusted returns. We remain committed to expanding this relationship and look forward to the many successful cross-border opportunities that will inevitably ensue. I thank you very much for your attention.
Thank you. Thank you for being here. And just generally, I'm working on border wait time reduction policies as one part of that, and also working on goods movement investments on that get to goods movement as well. And we have a bill that we're working on this year through the budget, and we're working on an enhanced driver's license law. You work in the area of capital and capital investment, and,
yes.
and our next speaker is also going to be talking about capital investment, and through pension funds, and pension funds make big investments in areas that spur economic growth. What in particular can, I mentioned that the combination of the border states make up the third largest economy. When you're looking at growing the regional economy, the border economy in particular, what can we do to help spur those investments? Do you work in areas of border wait time reduction, making investments in border wait time reduction? Do you know that there are loans being made to projects that accomplish, binational trade and deal with the behemoth challenges in crossing the border between the two countries?
Yeah, thank you. Well, I believe we need better opportunities for Mexican fellows here in Mexico and in the United States. And so both countries need to work together to improve their conditions as well. And to have them opportunities for their families to come and have visiting them as well. And also, I mean, if we have cross-border integration and cross-border investments, we can create companies here in California that can complement what Mexico offers as well, and the other way around. I mean, we have a lot of work to do, and I know you've been very helpful in promoting the Mexican and California relationship. And we have a lot of capital investments in Mexico and in equity ready to be deployed. And actually, we continue to increase these opportunities in both countries.
Thank you.
Thank you.
Thank you for being here. Did you have a question?
Could you just give me just a couple of company or industries that you see as I learn through this, as we learn together, that complement one another? That
sure.
Three maybe?
The agribusiness one it's a good example. The agribusiness. So, I mean, in some times of the year, you can grow some products in Mexico that you cannot grow here. So you can actually merge both productions and offer better products for the consumers. The energy sector as well. I mean, example, the gas pipelines that we just talked about. We need to import gas from Texas, and so we are working on gas pipelines from Texas to Mexico to do that in order to provide the sufficient energy in Mexico as well. And manufacturing, we have better conditions, and I mean, we try to be competitive in terms of salaries, and so we can have opportunities for manufacturing as well, automotive industry.
Since 2007, when our recession started, have you guys had a net gain of manufacturing jobs or a loss?
We, in terms of net gain, I think we have gained a lot. In the automotive, for example, industry, we've been fostering the most important firms that build automobiles across the world. So,
Right.
I mean,
And
it's,
if I can expand that, Southern California has a lot of high-tech firms that provide, high-tech labor on different computer gadgets and different components. And Mexico has seen a big growth of manufacturing along the border. So there's a synergy that can be developed, and it is developing, in which the high-tech components are made in Southern California, and the manufacturing is accomplished in Mexico, and it's done through the automotive and through Tijuana in particular has some of the largest, it's the largest producer of televisions in the world. So it's that synergy that's created that can be expanded on.
yeah, we have also a drone company that builds drones in Tijuana and sells the drones across.
Well, be careful
California.
about drones, because we have drone bills here that people are pushing, so
Well,
that's not a, anyway, thank you for being here.
thank you.
Yes, ma'am.
Can I ask a quick question?
Sure.
Mr. Riza, thank you very much for being here. I had a question about the pension money. So you said there's about $160 million
Yes.
that's available now to be invested, and then you talked about a 17.3% growth in assets. Is that related to pension money that you've already invested?
No, actually, what we have from those $160 billion for,
Billion, sorry.
no, yes, $160 billion.
Okay.
It's the whole portfolio of the Mexican pension funds.
Okay.
And from that portfolio, we are now, we need now to invest around 7 to 10% of
Okay.
that into productive projects in Mexico. And we invest them through a vehicle called SECA. And so we have around $25 or so billion ready to be invested, I mean, in projects like private equity, for example.
And I know here in the U.S. we have ERISA laws that protect pension funds to make sure that I was set on a pension fund for many years here, and we made sure that our investments were not too risky, and then we had laws to make sure that the money was still there when people retired. Do you have similar
Yes,
safeguards?
and we have a very top regulator. It's called CONSAR.
Okay.
And we have a very strong law and pension law, and we've been getting investments from pension funds since 2009. So it's been pretty new, but we are working on and having better laws involving the pension fund investment in Mexico. But I mean, we're getting there, and it's now been active. We have up to $9 billion pension fund money in private equity funds through the SECA.
Great. Thank you very much.
Thank you.
And if you have, we'll expand more on the pension information with our next speaker, Ted Eliopoulos. Ted is the Chief Investment Officer at CalPERS. He's responsible for managing an investment portfolio of approximately $300 billion and an office with nearly 400 professional staff. Welcome, Mr. Eliopoulos. Thanks for being here. You have.
Thank you. Do I need to
Proceed.
I think, is there a button to push?
It's on. It's on.
It's on? Okay. I didn't see a button to push. Good afternoon, Mr. Chairman, members of the committee. Thank you so much for inviting me here today. It's a real pleasure. I'd like to start with a brief overview of CalPERS and the CalPERS Investment Office, and then transition quickly to our investments in Mexico and our views of Mexico. First of all, CalPERS administers the defined benefit pension plan for approximately 1.7 million active and retired members. We take that responsibility very seriously. Those employees come from over 3,000 different employers within the state, including the state of California, the California State University System, school districts throughout the state, as well as local agencies. CalPERS' overall role is to administer the benefits set by those employers, set employer contribution rates, and manage the investment assets. The CalPERS Investment Office, which I oversee, has the responsibility to manage the CalPERS investment portfolio in a cost-effective, transparent, and risk-aware manner in order to generate returns to pay those promised benefits. Our vision statement is a very good framework to see how we operate. We're guided by an established and voted upon set of investment beliefs that our board established. Given the great size of the CalPERS investment portfolio, as well as the very long-term investment horizon that we operate with, we want to invest in a way that is repeatable, predictable, and importantly, scalable. The investment office that I oversee has 3 key functions. We're responsible for setting investment strategy and for the performance of the fund. We provide executive direction and leadership to the investment staff here in Sacramento. And we importantly manage an investment organization with a substantial global reach. And we do that in a government setting and from here in Sacramento, just across the way from here. My leadership team manages a staff of about 380 individuals and consists of 5 senior investment officers who oversee the various individual asset classes that I'll talk a little bit about shortly, as well as the chief operating investment officer who oversees our risk and compliance functions within the office. Our current assets under management is approximately $300 billion. It's a substantial pool of assets. In terms of our performance, our most recent fiscal year performance for as of June of 2014, the total fund earned an 18.4% return for that fiscal year. And now, of course, it's a good year, very strong fiscal year.
That's a great year.
Importantly, we like to look out for a much longer time periods as well. And in that regard, for the past 20 years, we've earned an 8.2% annual return over that time period.
Can I just interrupt and ask what your target return rate is?
The target return rate is 7.5.
That's awesome. So you're 8.2, very good.
So it's,
Thank you.
Yes. The CalPERS portfolio is very well diversified among several asset classes, including public and private equity, real assets, and fixed income. The principle of diversification, of course, seeks to offset any weaknesses in one area at any given time with gains in other parts of the portfolio. In terms of our asset allocation, in order to meet that 7.5% annual rate of return, as of February of this calendar year, the fund was made up of about 64% growth exposure, and that's public and private equity. So we have a very substantial portion in our portfolio seeking the higher returns that come in the equity portfolio, as well as our diversifying assets, which include an 18% allocation to fixed income, a 10% allocation to real assets, a 5% allocation to inflation-sensitive securities, and a little bit less than 2% in cash equivalents. CalPERS has generated very strong, substantial long-term returns, really by effectively managing these investments in a way to achieve the highest possible return given an acceptable level of risk. Great. So now looking more specifically towards our exposures in Mexico, CalPERS has sizable exposure to the country of Mexico with approximately $2 billion worth of assets invested in Mexican assets. More than half of that amount is in our fixed income portfolio with approximately $1.2 billion in assets in fixed income, followed by nearly $600 million in public equity asset exposure. And then in addition to that, in private equity, we have currently invested $132 million in private equity investments in the country of Mexico and $113 million of investment in real estate assets in Mexico. Our general outlook on the investment landscape in Mexico is a positive one. We are very encouraged by the recent progress of the reforms that have been alluded to and mentioned by the previous speakers on your panel today, and the quite substantial financial reforms the country has made. For CalPERS and other institutional investors, these reforms and the institutional investors' perspective of these reforms is crucial for ongoing foreign direct investment into Mexico. I can't underscore any more emphatically that the ongoing implementation of these reforms really is crucial to encouraging foreign direct investment to continue into Mexico.
Do you monitor the performance of those investments in Mexico separately from your other investments? So you can measure how well they're doing, if you're overall getting an over 18% rate of return on your investments, how do the Mexican investments stack up in comparison?
We do monitor that. I don't have the performance returns broken out by each asset class.
Do you have a general?
Well, it's a little complex in that the public equity performance over different time periods will have different performances. In general, for instance, in this fiscal year, the Mexican market from a peso perspective performed quite well, and would expect that it met our benchmark returns compared to our global benchmark. One of the risks and one of the considerations we think about when we invest in foreign countries like Mexico is currency risk, and how those investments then translate on a dollar-weighted basis. But I think you can see in the substantial amount of equity investment we have, as well as in the fixed income program, we're very positive in our outlook for the current economic conditions.
That'd be real beneficial if we could get those measurements so we can actually have something to look at so that we can measure your success there.
We'd be glad to provide that to the
Thanks.
committee. In terms of additional investing in the future into Mexico, probably explain just a little bit about how we invest. Every 4 years, CalPERS conducts an asset liability management process and establishes the return and risk parameters for the fund. We establish very specific parameters for each asset class, and we set the allocation ranges around each asset class. The investment office then operates the investment program within those allocations. Importantly, each asset class is managed a little bit differently. So I think hearing the questions on private equity, I'll get quickly to private equity. But in our public asset classes and global equity and fixed income, we manage those asset classes internally in CalPERS. Almost 100, it's over 90% of those assets we manage internally from our staff. It's one of the great competitive advantages CalPERS has. By contrast, in the private asset classes, given that private equity and real estate and infrastructure investing is such a local based knowledge investment program, we execute our investment strategies in the private asset classes through an array of external managers, so that we seek to identify and strategically partner with the best firms in the local markets that we're executing investment strategies. We work with our partners to set the strategy for a given program, whether it's private equity or infrastructure or real estate, and to identify opportunities, and then the external investment partners are responsible for executing that strategy, and that's particularly true in the foreign markets. I would say just lastly, before I conclude my presentation, we do expect that we'll be evaluating potential strategies and opportunities in the private markets, particularly in private equity and infrastructure, in the coming years in Mexico. We've had some level of experience so far in those markets and hope to build on that in the years to come. Mr. Chair, that concludes my formal remarks. Be glad to answer any further
Thank you very
questions.
much. Thank you.